How does interest rates affect the 10% distributions in the Secure Freedom Fund?
Great question. So Secure Freedom Fund, and this is, I don't want to get too deep in the weeds, but this is why we're doing Secure Freedom Fund. So Secure Freedom Fund has a very different investment thesis than the legacy funds. And Secure Freedom Fund is really targeting assets which are, frankly, they're going to be lower class assets. So instead of an A class asset, it might be a B or a C class asset. We're targeting, affordable housing properties in Secure Freedom Fund. So those properties tend to not appreciate very much because that's like they deliver great cash flow, but they don't appreciate. And so we were locking in fixed rate debt at 6.75%, at 6%, instead of, a lot of people right now are thinking about getting variable rate debt because it does seem like rates are going to go down. And we're saying, nope, we want to be protected from the downside event, even if that might keep us out of a potential upside event. So that's basically the business model for Secure Freedom Fund. Oh, and one final thing, we got way lower leverage on assets in Secure Freedom Fund, which again increases the cash on cash rate of return, but reduces the average annual rate of return, just to drive security for those investors. And the average annual return has a bigger impact on how much like Elaine and I make over the next 10 years, but sets up those assets for security and for success to deliver that 10% cash on cash rate of return for investors in Secure Freedom Fund.